Hello everyone and welcome back to the revision of the Advanced Auditing and Assurance paper that was done in December 2023. We, in our last lesson, did question 1. Today we move on to question number 2. Part A of this question reads, the following is an extract from a speech presented in a recent professional forum. First paragraph reads, in the private sector, going concern is an area of interest to users of financial statements. Shareholders and lenders wish to know that a business will continue into the foreseeable future before they can make investment or lending decisions. Paragraph 2. The going concern concept in the public sector differs from that in the private sector. This is because most public bodies, whether government departments, devolved administrations, local public bodies, or national funds, have a statutory existence that makes technical insolvency almost impossible. Lastly, the last paragraph, despite that, stakeholders in the public sector still have an interest in knowing whether these institutions are financially sustainable. Required, in the context of the above statement, discuss 8 factors that an auditor would consider in determining the going concern assumption of a public entity. So we've read that in the private sector, going concern is an area of interest to users of financial statements, and shareholders and lenders wish to know that a business will continue into the foreseeable future before they can make investment or lending decisions. The second paragraph says that the going concern concept in the public sector differs from that in the private sector. This is because most public bodies, whether government departments, devolved administrations, local public bodies, or even national funds, have a statutory existence that makes technical insolvency almost impossible. Despite that, shareholders or stakeholders in the public sector will still have an interest in knowing whether these institutions are financially sustainable. Required, in the context of the above statement, discuss 8 factors that an auditor would consider in determining the going concern assumption of a public entity. Now, candidates, while technical insolvency may be less likely in public entities, their going concern can still be impacted. So the question is, what are some of the factors that an auditor should consider when assessing the going concern assumption for public bodies? That is the question we are going to answer first. Part A. Factors that an auditor should consider in determining the going concern assumption. Now, the first factor to consider is government funding. The government funding reliance. Government funding reliance. What does that mean? That means that the entity's dependence on government funding and stability of such funding plays a key role. And significant funding cuts or uncertainties can threaten the ability to continue in operation. So when determining whether a public entity will continue operating in the foreseeable future, to determine the going concern assumption of a public entity, the auditor should check government funding reliance, such that if there is significant funding cuts for a given public entity or department, then that department is likely not to continue in operating in the foreseeable future. Do you understand? Government funding, because without funding, organizations or departments cannot operate. So the going concern may be threatened for an organization or a department or an entity of government where there are significant funding cuts. 2, financial sustainability. The auditor can consider financial sustainability. The auditor should assess the entity's long-term financial position, including operating margins, debt levels, and also cash flow, because unsustainable financial practices or inability to generate sufficient revenue may raise concerns or may affect the going concern of such an entity. Financial sustainability ought to be considered by an auditor when determining the going concern of an entity. 3, legislative changes. Legislative or regulatory changes. Changes in laws, changes in regulations should be considered. These are potential changes in laws, regulations, changes in accounting standards should be considered. These are changes that may impact the entity's operations or funding, and therefore unexpected changes can disrupt financial stability of a government entity. 4, public policy priorities. Public policy priorities. The auditor should analyze how changes in government priorities or public policies may affect the entity's funding or mandate, because shifting priorities could lead to reduced resource allocation, jeopardizing operations of a government department or institution. Public policy priorities can be considered when determining the going concern assumption in the public sector. 5, the economic environment, the social environment should be considered. Economic and social environment. Economic and social environment. The auditor ought to assess the impact of the broader economic and also social factors like economic downturns, social unrest, natural disasters, which can disrupt operations and reduce demand for services that are offered by a given public sector entity. 5 or 6, this is 6, operational efficiency and effectiveness. How effective is the entity? How efficient is the entity? Operational efficiency and effectiveness. The auditor ought to evaluate the entity's efficiency in using resources and achieving its objectives, because inefficiencies or failure to deliver on mandates can affect public support and future funding. So if an auditor is to determine the going concern of a given public sector entity, then he may, or the auditors may have to evaluate how the entity utilizes resources. So if there are wastages and inefficiencies, or if the entity fails to deliver on mandate, then that can affect future funding. Operational efficiency and operational effectiveness. 7, management, plans and strategies. What are the strategies of the public sector entity? What are the strategies? What are the plans? Does the organization have plans? Does it have strategies? That should be considered. The auditor should analyze the entity's plans to address financial challenges, the plans to improve efficiency, or even to adapt to changing circumstances. Because robust and credible plans can mitigate the going concerns, the concerns of going concern. You understand? Management plans and strategies ought to be evaluated by the auditor. 8. Public confidence. Does the public have confidence in the public sector entity or even stakeholder confidence and, let me say, and stakeholder support? Public confidence and stakeholder support. The auditor ought to check or consider the level of public trust and support for the entity, as it can influence future funding and political will to sustain the operations of such an entity. You understand? Because candidates, a loss of public confidence can impact budget allocations, can also impact legislative priorities. Okay? So these are 8 factors an auditor should consider in determining the going concern assumption in the public sector. So these factors highlight that although public entities have statutory protection, their going concern is not guaranteed. As much as there is a law in place that upon which public sector entities and departments are formed, that is not a guarantee that the public sector entity will continue operating in the foreseeable future. And auditors must thoroughly assess their financial sustainability, must assess the external environment, must assess the future plans that the organization has, provide an informed decision so that the auditors can provide an informed opinion on the ability of the entities to continue as a going concern. So these are 8 factors. 1, government funding reliance. 2, financial sustainability. 3, legislative and regulatory changes. 4, public policy priorities. 5, economic and social environment. 6, operational efficiency and effectiveness. 7, management plans and strategies. 8, public confidence and stakeholder support. So all these factors can affect the going concern of any public sector entity. And therefore, when the auditor is carrying out his or her audit, he must consider these factors in determining whether an entity is a going concern or not. That is question 2A. Question 2B reads, describe 4 procedures that an auditor might perform to identify subsequent events occurring after the financial year end in a company. Procedures an auditor should perform. What are the procedures for identifying subsequent events? What should the auditor do to identify subsequent event? What are the procedures? 1 is to inquire from management. Inquiry, right? Inquiry of management. This means just talking to the management, asking questions. Ask questions regarding subsequent events, because managers are the ones who are in charge with the operations of an organization. So if an auditor would want to identify subsequent events, then it becomes obvious. Talk to the management. Discuss with the management whether any significant events occurred after the reporting date that may affect the financial statements. Why? Because the management has a responsibility to disclose such events. Discuss with the management. Ask questions. Inquire, are there any subsequent events? So that is a procedure an auditor can perform to identify subsequent events. 2 is review of external sources. Review of external sources. The auditor can monitor news articles, industry publications, regulatory filings for any events impacting the entity or its sector after the reporting date. Review external sources, publications, newspapers, social media, industry publications, regulatory filings. That is one way to identify subsequent events. If the auditor does not get the information from the management, then he can seek for the same information from external sources. Performance of analytical procedures. Performance of analytical procedures. That's another procedure that an auditor can perform to identify subsequent events. This is the auditor can perform analytical procedures by comparing the key financial ratios to identify any trends with to identify the trends with prior periods. The auditor can also perform or can also compare the company's financial ratios with industry benchmark. And any unexpected changes between industry, between the financial ratios of the company and the benchmark, the industry benchmark, or between the company and previous periods, any unexpected ratios could indicate the occurrence of subsequent events. Perform analytical procedures. 4. Follow up audit. Follow-up audit procedures. Follow-up audit procedures. The auditor can perform additional audit procedures specific to areas that are identified as risky or areas that have a potential for subsequent events. And that may involve rechecking accounts receivables or confirming bank balances, accounts payables, and so on. So these are 4 audit procedures that the auditor can perform in order to identify subsequent events. And by implementing these procedures, auditors can identify and appropriately address subsequent events that may affect the accuracy and the completeness of the as well as the reliability of the financial statements. 4 procedures, 8 marks. 1, 2, 3, 4, 8 marks. That is part B of the question. Part C reads, your audit firm KKCOL LLP has been the auditor of Express Limited, a leading online retailer that was established a few years ago. At inception, the company had an average delivery time of a week, but has since grown to an average delivery time of between 1 and 5 days. The company started with 3 employees and has grown to 1,000 employees, including 150 customer service team who are available 7 days a week. It has emerged that an employee stole 20 million shillings by manipulating vendor payment records, pointing to the risk of fraud facing their trading platforms. Required, prepare a proposal to the directors of Express Limited explaining Roman 1, the need for an internal audit function in the company. Roman 2, the benefits of outsourcing the internal audit function. So you are to prepare a proposal, and the basis of the proposal is 1, the need for an internal audit function in the company, and the benefits of outsourcing the internal audit function. So this is a proposal from the auditor to the company, which is known as the Express Limited. All right. Part C, required candidates to prepare a proposal for establishing an internal audit function. Prepare a proposal to the auditors explaining the need for an internal audit function in the company and the benefits. So the proposal is this is a proposal to Express Limited. Then you can have the address there. So this proposal is to the Express Limited, and it is from the auditors. These are auditors. The name of the auditors, KKCO LLP. Then you have the address. Proposal to Express Limited from KKCO LLP. These are auditors. You understand, countries? Then you may have the date there. The date. Because we have dates. The date. You can have the date, any date, teacher's date. Then you have the subject, which you can say establishment of the audit function. Establishment of the audit function. Establishment of internal audit function should be internal audit function. Let me have it. Establishment of internal audit function. That's the subject of the proposal. Establishment of an internal audit function. Then candidates, we may have 3 sections or 2 sections within this proposal. We may have an executive summary, but looking at the marks candidates, this is for knowledge, but an executive summary may not be a must. What is important in this proposal is to capture the need for an audit function and the benefits of outsourcing the internal audit function. So you may have an executive summary where you highlight the problem that the company has had, because we've read that the Express Limited has experienced phenomenal growth in the recent past. It has experienced phenomenal growth. We read that the company initially had how many employees? The company started with 3 employees and has grown to 1,000 employees. So the company has experienced phenomenal growth in the recent years, expanding its workforce, expanding services. You can see, including 150 customer service team who are available 7 days a week. So that could be the introduction to this proposal, that the company has experienced phenomenal or substantial or significant growth in recent past, expanding its workforce, services, and delivery capabilities. We've seen it delivers within 7 days a week. And because of this rapid growth, we can say this rapid growth presents new opportunities and challenges, particularly regarding the internal audit function within Express Limited to address the evolving needs and safeguard the company's financial health and operational efficiency. So that could be what you can write under the executive summary. You summarize the problem. Then another part of this could be what is required in the question, which is the need for an internal audit function. So you can write the need for an internal audit function. That's another part of the proposal, the need for an internal audit function. Now, candidates, as Express Limited scales, relying solely on external audits is insufficient. As the company scales, as the company significantly grows, then relying on the external audit function is not sufficient. And therefore, an internal audit function offers invaluable benefits. So what are the benefits? What is the need? Why should the company establish an internal audit function? That's the question. The need for an internal audit function. The first reason why the company needs an internal audit function is to proactively identify risk and mitigate risk. Proactive risk identification and mitigation. Proactive risk identification and mitigation. Because we read that an employee stole 20 million. The company came to know about it later. But had the company established an internal audit function, there are chances that the company could have identified such loopholes and put in place mitigation against such risks. Risk identification and proactive risk identification and mitigation is a reason why there is need for an internal audit function in Express Limited. This refers to continuous internal audits proactively to to identify vulnerabilities in the internal controls, preventing potential fraud, preventing errors, preventing inefficiencies before they become costly problems. That's one reason why the company needs to have an internal audit function. Two, an internal audit function can lead to improved governance and compliance, improved governance and compliance, because internal audits ensure adherence to internal policies. The audits may also help in regulatory requirements, adherence to regulatory requirements, adherence to ethical standards, and thereby promoting strong corporate governance. That's why this company needs to establish an internal audit function so as to improve governance and compliance. 3, given that this company has grown from 3 employees to 1,000 employees, an establishment of an internal audit function can lead to enhanced operational efficiency. Enhanced operational efficiency. That is the role of an internal audit function. How does establishment of an internal audit function lead to enhanced operational efficiency? This is how. Enhanced operational efficiency is achieved through regular audits, which analyzes processes and workflows. Regular audits analyzes processes, because we are talking about operational efficiency. It analyzes processes, it analyzes workflows, and out of that analysis, the audits identify opportunities for improvement and streamlines operations for increased cost effectiveness. This company needs an internal audit function for increased operational efficiency. Another reason is in relation to financial reporting. Financial reporting. Internal audit function strengthens financial reporting reliability. This is D. It strengthens financial reporting reliability. How? Because candidates, internal audits enhance the accuracy and the reliability of financial reporting by verifying data and assessing internal controls over the financial systems. You understand? It strengthens financial reporting reliability. This function may also give what we call independent assurance and objectivity. Independent assurance and objectivity. Internal auditors provide an independent perspective on the effectiveness of the internal controls, complementing the external audit findings. That's why this company needs to establish an internal audit function. So we've answered the first part of the question. 1, the need for an internal audit function. The second part of the question required candidates to explain the benefits of outsourcing the internal audit function. Now, candidates, there are 2 ways in which the internal audit function can be established. One is to this function carried out by the employees of the company. Alternatively, the company can outsource this function from external auditors. So what are the benefits of outsourcing? That is the question. Benefits of outsourcing. Now, candidates, while establishing an in-house internal audit team is valuable, outsourcing may also offer several advantages. The first advantage is cost efficiency. Cost efficiency. Outsourcing eliminates the need to recruit, eliminates the need to train, and also to manage a dedicated internal audit personnel. And that reduces fixed costs, and also it offers flexibility based on evolving needs. This is a benefit of cost efficiency. B, access to expertise. Outsourcing may provide the company with access to expertise. Outsourcing provides access to experienced and qualified internal audit professionals who may have diverse industry knowledge or skills and so on. So by outsourcing, the company can have access to wide range of internal audit professionals who may have industry knowledge that the company may not have if it were to have an in-house audit team. 3, objectivity and independence. Objectivity and independence. External internal auditors bring an objective and independent perspective, which is free from potential bias within the organization. 4, scalability. Scalability. Now, outsourcing allows for scaling the internal audit function as needed without incurring additional fixed costs during periods of growth or during periods of contraction. So we have scalability. Lastly, flexibility. Choosing an external audit, choosing to outsource the internal audit function can lead to flexibility. It offers flexibility in tailoring services to address specific risks, to address specific priorities, and also to maximize the value of the internal audit efforts. So these are 5 benefits of outsourcing the internal audit function. So you recall, candidates, in these questions, candidates were to develop a proposal to Express Limited as KKCO auditors. The subject of this proposal is establishment of internal audit function. Then I began by saying that when doing a proposal, it's good to have a brief introduction, what we call an executive summary, where in this case the candidates or the auditors are to highlight the reason for having the proposal. And we said that because the company has grown significantly in the recent past from 3 employees to 1,000 employees, and given that the company is experiencing challenges where an employee stole 20 million, then there is need to have internal audit function. And in this question, we have highlighted 4 reasons for the need for having an internal audit function. That is proactive risk identification and mitigation is the first reason. Improved governance and compliance, number 2. This function can also enhance operational efficiency. Number 3, may strengthen financial reporting reliability. The function can also give rise to independent assurance and objectivity. Then the question required candidates on to highlight the benefits of outsourcing the internal audit function. We've seen one benefit is cost efficiency, access to expertise. Then there is objectivity and independence, scalability and flexibility. Within this proposal, candidates, you may have recommendations. From the auditors to Express Limited. And the auditors can strongly recommend establishing an internal audit function at Express Limited. You can write that we believe outsourcing this function provides the most effective, the most cost-effective and advantageous option, given the current stage of growth the company is going through. And under recommendations, the auditors can state that they can assist in selecting a qualified and reputable internal audit outsourcing provider with the proven experience in e-commerce and retail sector. So that could be the recommendations. One is to recommend the establishment. The auditors recommend one, establishment of an internal audit function. Then under recommendations, the auditor can volunteer in assisting in selecting qualified and reputable internal audit function. I've mentioned about outsourcing as another recommendation. You understand? Outsourcing the function may be more cost effective. Outsourcing. The auditors can recommend you outsourcing, and also 3, assisting in identifying internal auditors. Then you close the proposal. Thank you. Thank you. Sincerely yours. Then you sign. But candidates where the marks were mainly allocated under these two categories, because these are only 4 marks for each. These 4 marks. Any 4 points here would earn 4 marks. Any 4 points here, 4 marks. That is the body of the proposal. You may miss on recommendations and even these other aspects, but when answering such a question in an exam, make sure you give the answers as required. Roman 1, the need for an internal audit function in the company. We've identified the need. Then the benefits, you have given the benefits. So that is it for question 2, December 2023, Advanced Auditing and Assurance. Thank you for attending the lesson. We'll meet in our next session where we will answer question number 3. And please attempt the question before joining the next class. Bye-bye.